something was wrong, someone would have called us out. The last few months on Solana ecosystem have been aging. If you want to on-ramp crypto, it's easier to do that with a stablecoin.
I bought my house in stablecoins.
Fiat currency still plays a major role in our lives. I don't think it's going to change anytime soon. When the bear market hits, you run risk of liquidation.
2023 is a year of building. The ecosystem is way more mature than it's ever been for Solana.
The concepts, they're very confusing. The nice thing about crypto is everyone's very happy to help you out.
What's up, everyone? My name's George. We're back again with the Next Billion podcast. We're talking to the entrepreneurs, the builders, the people that are making it happen to onboard the next billion people into crypto. And we're talking today to a good friend of mine, Hal from Hedge. And we're going to be talking about lots of different things, really. Stablecoins, maybe vaults, a lot of different stuff. But Hal, it's great to have you on the podcast today. Thank you so much for coming along.
Great to be here. Thanks for having me.
Yeah. And you said recently you were at, was it the Taipei Blockchain Week or something like that?
Yes, just came back from Taipei, actually, back in New York. Yeah, it's great to see people over there. It was my first time as well in Taipei. Really good to see a lot of people over on the outside of the world as well, doing crypto and all that,
Yeah, I think Taiwan has a stealth amount of a lot of developers and engineers just because it just has such a strong engineering base. Literally, that's what everyone does after school because TSMC and, everyone's there, right?
So exactly, yeah. I was also very surprised by the amount of developers, builders in that space. You don't hear that much from them, right? That's the other thing. So very eye-opening.
That's awesome. Yeah. And you also got there for New Year as well, right? With Taipei 101 doing the cool fire.
It was also a long time bucket list thing for me,
Yeah, I always see that on TV. I don't think I've seen it myself, but I need to go and visit. How about we start things off? Tell us a little bit about yourself. How did you get into crypto and how did you find yourself sitting here today in 2023?
Yeah, I think it's a somewhat straightforward story, I think. So I studied CS and math in college, in Germany actually. And then after college, started working for a big tech company. That's where I met the co-founders of Hedge. And then after a few years working in big tech, you're like, okay, it's time for something new and want to do something else. So thought a little bit around. Ultimately, current co-founder, Seb, approached me, asked, hey, I'm doing this crypto startup. You want to join in? So, thought about it, did some research. That was kind of like, not the first time I heard about crypto, but it was kind of the first time I started seriously dealing with it. I didn't have Bitcoin before that. I didn't have ETH.
Is this 2021 or?
That's 2022 actually already, yeah.
Okay.
So yes, just a few months ago actually. So before that, basically complete crypto noob. I mean, obviously working in tech, you kind of hear about it and you know the concepts and so on. But like I said, I never owned Bitcoin, never had any ETH. I kind of knew what smart contracts were, but I didn't really deal with it before, right? And then Seb approaches me and says, hey, I did this Solana hackathon, built this project that turned out to be Hedge later on. And I'm thinking of raising and making a proper project and company. Do you want to join? So kind of thought about it and I was like, hey, yeah, why not? Would be an adventure, right? So that's how I got into crypto. Like I said, relatively new to crypto, I would say, especially to DeFi. But once you work in DeFi, you get so immersed into it, you catch up very fast. So I feel like by now I'm not one of the veterans, but I'm kind of much more educated about it than the normal person.
Probably aged 10 years as well, in the last
Yeah. The last few months on Solana ecosystem have been aging.
Yeah, definitely. Was there a financial background before that?
No. So I worked in tech. I studied CS.
You came into crypto and especially DeFi stuff, all of these crazy different financial things going on and smart contracts. And how was that initially when you first looked into this whole ecosystem? Were you like, what the hell's going on here? Or was it a bit overwhelming or?
I think in the very beginning, it's definitely overwhelming, right? There's all these terms that you need to learn, all these new concepts that you need to learn.
Made up words usually.
Yeah, exactly. I remember in my very first few weeks, I kept confusing Tether with Terra because they both did a stablecoin at that point, right? There was USDT.
Yeah.
And then people would say Tether and I would think Terra and vice versa. So it takes a while just to learn the vocabulary for sure. And I think the concepts, they're very confusing in the beginning. But at the end of the day, if you really spend time and really deal with it, try to understand the underlying fundamentals, it's going to take some time, but I think you can figure it through, right? I think at the end of the day, it's not rocket science, at least the basics of DeFi, right? Just understanding what impermanent loss means, for instance. There's actually good material out there as well. I remember watching a lot of YouTube videos, reading a lot of blogs, stuff like that to just learn about it. And I think the nice thing about crypto is I think everyone's so passionate working in crypto that they are very happy to help you out and explain things. There's really good tutorials out there and you talk to people in the ecosystem and they are happy to explain things to you as well. So I think while it might be overwhelming in the beginning, if you really commit to it and you go all in and dive deep into it, it's not that hard to get in, I think.
Yeah, well, I think that's a good lesson for everyone out there who's maybe hearing often all of these different terms that people talk about in crypto. Oh, it's too hard and this kind of stuff. It's no, I think if you just dedicate some time to learning about a lot of these concepts, you can get there. But I think the best way to do it is to just learn by doing. Like, did you have much experience before using wallets, staking, swapping on dexes or anything like that?
Not really. I think, like I said, basically with Solana, that was my first chain as well, kind of the first like hands-on practical experience with DeFi as well. But I think it's like most of the tutorials that I was reading and watching, they were all about ETH. But then I think you can definitely see the parallels, right? Like once you understand how a DEX works on ETH, Solana DEXs are not fundamentally different, right? So I think trying things out for yourself, sure, can help as well. But I would say it's also like more than just being hands-on. It's like really like trying to understand the underlying concept and why things are the way they are. What I noticed, for instance, when I was like just trying out LPing on a DEX, sometimes you're just like in this awkward situation or in this awkward week where something weird happens and then you get used to something that is not normal, right? When
and APYs or something.
Yeah, exactly. If you happen to start LPing during a high volatility week, then you just feel like, oh yeah, I need to, when we talk about UniP freestyle boards, I need to pick a wider range, and that might not be true in other situations, right? So yeah, I think the good thing about getting hands-on for sure is you get a feeling for like what the UX is and what are the kind of challenges, especially if you want to build yourself. You can start identifying the kind of roadblocks and the pitfalls that people get into and that might stop people from doing things. But I think at the same time, you also should learn the fundamentals beneath it and like what's going on, right? And just try and really understand that what happened to me practically while I was hands-on is just like a situational thing and things can turn out differently. Right?
Yeah, totally. And I think when you came into it, it was a good time because a lot of these DeFi protocols, they'd been through some iteration during 2020, 2021. They're on like a V2 or a V3, or some protocols are now on like a V6 or 7 or something. But yeah, a lot of those sort of teething problems are getting worked out and we're not quite there yet. But I think the ecosystem in DeFi world, it's probably way more mature than it's ever really been at any point in time, especially for Solana, which is good to see. So you come in to this new startup, Hedge, and you're like, what's this? What's going on here? Or maybe tell us a little bit about Hedge and what you guys do.
Sure, yeah. I remember having a very hard time understanding it as well in the beginning when Seb was explaining to me. But basically Hedge, what we do is you can view it from multiple angles. I like to say we are at the end of the day doing a stablecoin, a Solana native stablecoin, which basically means it's a token that is supposed to always be worth exactly $1. That's the currency that we are pegged to. And the way we achieve this is that our stablecoin is backed by crypto assets. So for every dollar of our stablecoin, it's called USH, we have some crypto asset behind it, backing it, whether that's Solana or Bitcoin or ETH, or we also accept other types of collateral. But basically what we offer is that if you have Solana, you can come and deposit it with us and then essentially borrow our stablecoin against that, meaning that we lock up your collateral. Like let's say you have $10 worth of Solana, we lock that up and we can give you a few dollars worth of our stablecoin in return for it. Your collateral is still with you, like the $10 of Solana are still yours, but you get it back as soon as you repay your debt, which is our stablecoin, right? So on one side, we are offering the stablecoin, which is backed by crypto assets, but on the other side, I kind of like alluded to this a little bit already. We offer you a way to borrow against your assets. And there's like multiple reasons why you would want to do that. Maybe if you already trade with stocks, you know about the concept of margin trading. So basically, I think a very common thing I would say is that if you are very bullish on a certain asset, meaning that you think the price is going to go up, then you might want to leverage, which means you're going to want to borrow against that, use your loan to buy more of that asset. So if the price actually goes up, then you make a much higher profit than you would have made if you just kept your asset. So it's very similar to like taking a mortgage for a house. If you think that the price of your house is going to appreciate, if you take a mortgage, you can buy a much bigger house. And then if the prices do go up, you actually make a lot more profit in absolute numbers, right? So that's kind of like, I think, the most common reason why you want to do that, like borrow against your crypto assets. The other one is maybe a bit more tactical. So like in certain situations, it might be beneficial for you from the tax perspective or something to not sell your assets, but like borrow against them instead. I think especially in the US, there's this like myth going around like billionaires, they never sell their assets, they only borrow against them, and that's how they evade taxes. Along these lines, it might be another reason, right? Either way, I think you are bullish on your asset, you think the price is going to go up, so you don't want to sell it, but you still want to access the value, the money somehow. So you just like borrow against your assets instead.
Right. And you mentioned Tether as well and UST, and we've had stablecoins for a while now, I guess. But what you're talking about there, like a collateralized stablecoin where the money backing the coin, like is that public? Can people see it? How transparent are you guys? Do I just have to trust that your stablecoin's worth $1, or how does that work?
Yeah, I think that's one of the nice things about DeFi. So like, because it's written in a smart contract, is anyone can basically verify that our stablecoin is actually backed by the assets.
Which is USH, right?
USH, exactly. Yeah, our stablecoin is called USH. If you look up our smart contract that is on chain, you can actually verify, the accounts. Like you can see how much stablecoin is in circulation and how much assets are backing the stablecoin. So that's the beauty of DeFi overall. That's like very transparent. I would say I do admit that I think if you're a complete beginner and I tell you, hey, can you just verify that the stablecoin is actually backed? It's not as easy, right? Like you have to understand how to look up these things. It's out there in the public. So if something was wrong, someone would probably have called us out already. Right?
That's the beauty about transparency. And so if you lock up your collateral and you make some USH against that, and then you send that to me, and then let's say I go do something with the USH, is that USH ever at risk if, say, you lose the keys to your wallet, or maybe your collateral's not worth what it says? Like, do I still have a $1 of USH in that scenario?
Yeah, I think that's kind of like where the certain stability mechanisms come into play. So ultimately, our stablecoin is worth $1 because people believe it's worth $1, right? And the way we convince people that it should be worth $1 is that we can tell you, hey, look, we have the same dollar amount worth of crypto assets backing it, which at the same time mean that if the price of these assets would decrease, then we need to do something what's called liquidation. So at that point, we basically are forced to unwind your position, meaning that in the beginning, I had this example. You gave us $10 worth of Solana. If the price of Solana drops now, and now it's only worth like $5, for instance, right? And we have more USH in circulation backing that, then before it reaches $5, we need to actually sell off your Solana and use that money that we made from a sell-off to repay that USH. So that is something that is a very common thing in finance, in traditional finance as well in DeFi. You don't want to get liquidated because there's usually a penalty coming with that. In our case for Solana, it's 10%. So if you have $11 worth of Solana, you can borrow 10 USH against that, like $10 worth of USH. But as soon as it drops below $11, let's say $10.90, now we're like, okay, your Solana is close to being worth less than the $10 of USH. Now we need to sell off your Solana. So you lose that 90 cents difference. And we use that $10.90 to basically repay your $10 loan. So for you as someone who just got USH from someone else, you have no idea about that $11 Solana that I was mentioning. That kind of mechanism makes sure that your USH is always worth $1. And then because there's no hard peg mechanism, there's smaller things where we do interest rates similar to the Feds. You can increase or decrease interest rates to basically increase or decrease demand on your stablecoin. And with that, do some smaller adjustments to the price of USH. So what can happen is that it's temporarily trading slightly below or slightly above $1. And in those cases, we basically adjust these interest rates to make sure that the market is incentivized to bring the price back to $1.
And that's also an opportunity for people as well, right? Because let's say the stable coin, it's meant to be $1, it is $1. And then one day, let's say it's worth 90 cents or something like that. But the collateral's still there. I can see it on chain that at least $1 worth of collateral is still there. I could go and buy that stable coin at 90 cents and then I could redeem it for the collateral of $1, right? So I could make money that way. And then if I kept on doing that, that would push the price of the stablecoin back up to $1 essentially, right?
Exactly, yeah. I think that's another somewhat unique feature that we offer is that you don't even need to have a vault with us. But if you have USH, you can redeem it against collateral, meaning that instead of liquidating it through the price mechanisms, anyone can come and profit from this arbitrage opportunity where if a stablecoin is below $1, you can buy it up for cheap, and then you can get $1 worth of collateral against it from someone else's collateral. So
you're not holding the bag at any time. You can always go, hey, I have this stable coins. I don't have to go and sell them to someone. I can literally just go and redeem the collateral for that and then just get the SOL or whatever it is backing it back.
Yeah, exactly.
Yeah, that makes sense. I think the best example of this that we have in crypto ecosystems is probably DAI. That was the first stable coin that used this collateralization mechanism. It's been around for many, many years. It's on Ethereum. But it was very important as some sort of reference point for the rest of these different apps to build upon. If you needed a stable coin and you wanted a decentralized stable coin, because that's another one of the benefits, right? Is anyone can do this. I can do this with my wallet sitting here. You can do it on the other side of the world. Someone sitting in a boat in the middle of the ocean can also do it.
As long as they have internet, yeah.
Yeah, as long as they have internet, right? But yeah, so decentralized in that way that we're not relying on if we have a bank account or something like that, right? Say someone like Tether or USDC. And they have redemption mechanisms as well, but this is much quicker and it's all on chain and we can all see it. So I guess maybe just more broadly zooming out, what do you think the utility or the necessity for having a stablecoin is? Why do we need stablecoins in general, in crypto land?
Oh, that's a good question. I'm not sure I can give a good answer on like why we need them. And at the end of the day, for me, it's like a practicality thing, right? I think volatility is not great for multiple reasons. I think if you want to save money or like have a store of value somewhere that is safe and you don't want it to be volatile. So naturally, I think if you don't want to, get into the thrills of like up and downs of price movements, stablecoins are great for that. And the other side of the thing is, unfortunately, or like at the end of the day, fiat currency still plays a major role in the world, right? In our lives and the financial system. And I don't think it's going to change anytime soon, right? So like I said, most stablecoins are pegged to the US dollar, which at the end of the day is a fiat currency backed by the US government. And the US government is collecting tax payments in US dollars, right? You can't pay your taxes in Bitcoin. So I think fiat currency at the end of the day still plays a dominant role in the financial system of today. So naturally having someone that kind of like mirrors that in the crypto world just feels natural, right? It just feels like a practical thing, something that people can hold on to, right? I think that a lot of people, even Bitcoin maxis, they still look at the Bitcoin to dollar price, right? In theory, if you're Bitcoin maxi, you shouldn't care how much dollar one Bitcoin is worth, right? One Bitcoin is one Bitcoin. So I think at the end of the day, it's a psychological thing. Like that's just what you're used to. You denominate value and money in a certain fiat currency. And if you want to on-ramp crypto, like if you want your money that you have in your fiat currency, if you want to turn that into crypto, it's much easier to do that with a stable coin.
I think the people that have really embraced that over the last, say, 6 years is probably exchanges. Because I remember back in the day, a lot of exchanges, like if they wanted to do USD as a trading pair, they needed an actual bank account. And then if you're an exchange and you go, hey bank, can you give me a bank account? They'll be like, see you later, and put the phone down. So a lot of these exchanges, they literally couldn't list fiat pairs, right? But they could list a digital coin that represented a USD. And at the end of the day, that's all they cared about and needed. You just needed a Bitcoin USD trading pair. That's what people wanted. And they don't care that you can't get a bank account or whatever. But if you're tech savvy, you can be able to add that stablecoin to your centralized exchange. And hey, a lot of them did that. And I think that's probably how Tether grew a lot in the early days. It was sort of like a proxy for needing real USD. And I guess maybe in the DeFi world, a lot of these stablecoins are useful in different apps, whether it might be some order book exchange, like some central limit order book, like a Serum kind of thing, or we'll talk a moment in about vaults and AMMs and stuff like that. Or maybe it's just some app which rewards people in stablecoins or does something, right? Like I think having a stablecoin as like a core pillar is just good for being able to easily integrate into all of these different apps. And you don't know where it might end up and what people need it for, but the point is that it's very easy for them to offer fiat pricing to people, and that's how a lot of people think.
Yeah, I think you said it exactly right. At the end of the day, certain situations, you want certain stability. If you put your money to a bank account, the number is going to stay roughly the same and you earn a little bit of interest, whatever. But like you kind of have this reliance that like in 2 years, if you look at it, the number is still mostly there, right? The money is.
Yeah, and like I always tell people, I think I mentioned this before, I bought my house in stablecoins as well, and I decorated it in the list with stablecoins. So like they do have a real world utility and use case, and especially in many countries of the world, they love it. But I guess talking about, I think, did we mention Breakpoint maybe before and that sort of thing, but is it north or south of Lisbon? There's a giant wave and it's called Nazare, and it's the biggest wave in the world.
I think it's south of Lisbon, yeah.
South of Lisbon. Did you go and see it while you were there?
No, we didn't have time for that.
Oh, you got to go see it, man.
Yeah.
But I believe that there is another connection to the word Nazare with you guys. So tell us, what's all that about?
Yeah, so I think one interesting thing about Hedge and stablecoins in general is like a very important piece of that is liquidity. So like how many people actually use your stablecoin, how much of your stablecoin is in circulation, and how easy is it for you to trade the stablecoin. So long story short, it's kind of like, hey, we were looking for ways to make sure that we have enough liquidity on USH, meaning that it's easy for people to trade it. At the end of the day, that's what you want to do with your stablecoin, right? Like I was saying earlier, the examples that I gave, either you want to use our stablecoin to buy more assets or you want to use it to cash out. So in both ways, you need to take our stablecoin and be able to trade it with something, right? So in order to help us do that, we started this project called Nazare, which was a collaboration with another team, a former GoblinGold team. And we built this tool that helps you to provide liquidity for certain pairs on an AMM, like on a DEX, easier. So I was mentioning this earlier a little bit with like Uni free, you have to select a range. And if you go out of range, you stop earning yield, all these things. And the goal of Nazare was basically to make that easy. So, for the user, it's much simpler. Like you don't need to worry too much. You don't need to follow the price. Like we do all that for you. The second part, that's a bit more advanced for sure. But the second part of that is like with Nazare, we are able to offer you leverage on that LP token, which sounds like a handful or like a mouthful. But basically, it's another way for you to provide even more liquidity than the money you actually have by borrowing against that money that you already provided and like loop it a few times. I would definitely say that that's a more advanced strategy for sure. But the ultimate goal of Nazare was to help us increase liquidity of our stablecoin, which is very important for stablecoin projects. If you look at UST and like Terra, why UST collapsed, at the end of the day, there was a bank run. They didn't have enough liquidity, quote unquote. I mean, arguably, all the liquidity in the world wouldn't have helped. But I think a lot of smaller stablecoin projects basically stand and fail with how much liquidity there is. So for us, it was natural that we kind of start a project like Nazare to help us build up liquidity for USH.
Yeah, I think that makes sense because you mentioned UniV3. We're talking concentrated liquidity pools. If people are familiar with those, like we're familiar with the original Uniswap concept, you have 50-50, you have two tokens in a bucket and they're 50% each, and then you stake both of those tokens, you get a thing called an LP, and then if token goes up or down, you increase the value of each of those buckets of token X and Y. But I guess Orca Whirlpools has done a really good job of this on Solana, being able to essentially put in two tokens and be able to adjust the range at which you want to provide liquidity, which the TLDR on that is, if you go to the original Uniswap, liquidity was provided all the way up from, 0 to infinity as a number. Whereas with, say, concentrated liquidity, you can go, hey, I only want to provide liquidity to Solana USDC at a price of between $15 and say $17. And you can make that a thing. And you can put all of your money just in this specific range. So if Solana goes outside of that range, then you're not making any money on your liquidity. But I guess the point is that managing all of that and making sure that you're in range or making sure that you're in the right pools or something like that is something that you guys are taking care of with Nazare, right? And I think those sorts of products, probably popularized by like option vaults as well. I think they've simplified the process of adding liquidity to options protocols. But I guess for you guys in the stablecoin, like critical thing is, hey, we need higher TVLs, we need more users, and this is a way to just make it easier for people to interact with it, right?
Yeah, exactly. And I think, especially for stablecoins, like you mentioned already, right? Before we had these concentrated liquidity market makers, you would provide at a price from 0 to infinity, which for a stablecoin doesn't even make sense, right?
Yeah, it's going to be $1. Like, why provide liquidity at 50 cents? Who cares?
Exactly. Yeah. So I think we definitely have seen great metrics in terms of like volume and efficiency with concentrated liquidity market makers for our stablecoin itself. So that for us, building something like Nazare that helps you just like concentrate everything around $1 for our stablecoin, that was very helpful.
Yeah. And have you noticed in the bear market that maybe more people are switching to that? Or I know usually bear markets, unfortunately, there's a lot of people that fall off the bandwagon. But have you guys noticed that maybe having a lot of people that are in stablecoins, or at least a lot of people have switched to stablecoins? And I think even myself, I'm like, hey, if I've got some stablecoins lying around, I want to get a yield on it, right? And is that maybe another core thing that you guys are looking at, is how can we provide yield for people that are already sitting in stables in a bear market?
Yeah, exactly. I think you described it exactly, right? Like in a bull market where everyone's, hey, prices are going up, I want to leverage my position. Like everyone is into volatile assets like Solana, ETH, Bitcoin, etc. I think what we definitely saw in the second half of last year, like 2022, is people kind of like get away from that. They like, as when the bear market hits, people are like, less bullish. They don't really believe that the price is going to go up anytime soon. And at the same time, you run risk of liquidations, right? So we definitely saw a lot of people be more interested into these kind of stable assets that are still yield bearing, like that you still earn a little bit of yield, like a few percentage of APR. Arguably less than, if Solana price doubled in like 2 weeks, but it's still something, right? Like at the end of the day, you want to beat inflation, you want to earn yield on your money. So that's again where like both Hedge offered Solana USDC as collateral, which is a yield-bearing stablecoin. So like it's USDC that earned back then around 3 to 4%. I think now it's a bit down to like 1% or something. You still earn some money on your USDC, as well as Nazare, where we kind of like by providing liquidity in like say USH and USDC, you earn a bit of trading fees, you earn a bit of rewards that we kind of give on top to incentivize you to provide liquidity. So yeah, these kind of things definitely became more attractive in bear market, right? And I think it's natural. Like usually when people speculate on price going up, if they don't think that's going to happen, then they look for yield in other places. And then stablecoins makes perfect sense because there's less risk that the price is going to decrease, right, for a stablecoin.
I think it makes sense as well. And the two products like having a really good synergy as well, because like you can make sure that the Nazare pools are targeted towards this increasing yield of USH. And then if that's the case, then everyone's like, oh, in order to participate into this thing, I need USH. How am I going to get it? Oh, well, okay, I need to go and actually create it, right? And if people just go and buy USH, then that pushes the price over $1. And we get that situation that I described where there's an arbitrage opportunity in that case, where I can go and sell my USH for more than what it's meant to be worth and make the difference. So I like the synergy between those two things. So I guess as well, from both the hedge perspective as well as the Nazare perspective, we're now into a new year, into a glorious new, hopefully, year that's not going to be marked with explosions and various blow-ups of various funds and things in crypto. But what's your, say, predictions or what are you guys working on for this year in 2023 in the hedge and Nazare world?
Yeah, I mean, I think maybe that's a prediction, but in general, what we see is like liquidity has been massively reduced, especially after the recent FTX collapse. A lot of people got burned by that, a lot of just money just vaporized, right? So I think one thing where we see already is certain assumptions that we made in the past are just like no longer true, right? And we have to adapt to the new situation. So I mentioned Solan's CUSDC earlier. And I was saying like back then was earning 3%, 4%, and now that's reduced to 1%, right? And I think across the ecosystem, what we see is liquidity has been massively reduced, which is definitely an issue for us as well. Right? Like, so our price for USH got definitely more volatile on paper just because there's less liquidity, meaning that any trading is going to impact the price more, right? So I think one thing that we definitely need to focus on is to make sure that we recover from this. And my personal prediction on this would be it's going to take a while. Like at the end of the day, we need patience. I actually don't know how much money got vaporized by FTX, but after such a huge collapse, a lot, right? Like after such a huge collapse, it's not going to happen overnight, but suddenly we turn on a switch or like we launch a magic feature and like suddenly everything is back to how it used to be or even better. So
you know what though? I think this might be an opportunity though. That's how I kind of think of it because as you say, like a lot of people got wrecked in FTX and pretty much the entire crypto ecosystem. I had some exposure. I think a lot of people did. So a lot of people maybe now know the problems of dealing with a centralized exchange, hopefully.
Yeah.
And the solution to this is use decentralized exchanges. The problem with FTX was, did they have the money? Oh, turns out they didn't. Oh, they lent it to Alameda. Oh, Alameda went and gambled it and lost it all. Oh, and now it's not there anymore and you can't withdraw your money. So the problem was, I want to be able to see that you have my money and that I can get it at any stage. And that's the cool thing about DeFi is that we literally have all of the tools available for us to go and see where the money's at any stage on the blockchain. So maybe I think you're right, 2023 is a year of building, but it could also be an opportunity for people to figure out DeFi and come on board.
I mean, definitely, right? I believe that like long term, this FTX collapse might have been a good thing, like long term, once we recover from this, because it really showed that DeFi is the way to go in the sense it's very hard to be able to trust a centralized entity completely with those funds, right? So I think ultimately, looking at a very long horizon, this might have been a good thing. But I think for the short term, the dip that we take, that's definitely going to hurt. So that's what I mean with like it's going to take time, right? I definitely think DeFi as a whole is going to recover from this. It's just a question of like how long it's going to take, right? So in that sense, like you're right. I think now is the time where we really concentrate and focus on like building out the DeFi ecosystem. I think in terms of FTX, before the collapse, there were already a lot of decentralized alternatives to FTX. And I think that's becoming even more important now. These things are going to get more attention now as well in the medium to long term. So I don't know if it's going to be in 2023. I don't know how long it's going to take, but I think what's important now is to have patience, right? Both on the builder side and on the user side, whereas it's going to take a bit to recover from this. So.
From your guys' perspective, there's a lot of people, like all of these hackathons and stuff around the world, they're building all of these different random things. Are you this year maybe looking to reach out to some of these teams that are building whatever it is and being like, hey, if you need a stablecoin in your dApp, you should take a look at what we're doing over here with USH. Is that maybe an area that you guys see interest in? Like, essentially, that's what I would think is the next step is like, you want the stablecoin to spread in usage and all of these people are going to do this crazy thing or whatever. And it's like, cool. Integrate our coin into your app, which is like super easy. It's all on chain. Here it is. And then cool. Now there's an additional utility for the stablecoin, right?
Yeah, exactly. And I think we've been doing that already, in the last year. That was kind of the major reason why we would go to these hacker houses and these different conferences. That partially why I got hired as head of product and business development. So that's definitely something we'll continue to do. I would say though, it is definitely harder to find good use cases for our stablecoin with lower liquidity, right? Like I said, you can't underestimate the importance of having liquidity on your stablecoin just because it makes everything easier.
It's chicken and the egg as well. Like,
Exactly.
the saying liquidity begets liquidity. It's like, cool, but how do I get the liquidity?
Exactly. It's a chicken and egg, right? For sure. So I think it totally makes sense. As someone who would integrate our stablecoin, you want to make sure that, hey, the stablecoin is stable, the stablecoin has users, there's actually demand and like there are users for your stablecoin. So it is definitely a chicken and egg, but we managed to deal with that in the previous year, and I don't see why we wouldn't be able to continue this year. That being said, it's getting harder for sure with less liquidity. I think the ecosystem overall has taken a big hit. So it's not that we're the only ones who got hit by this. So
yeah, absolutely. And I think, one of the cool things maybe like 2021 was the year of where NFTs were really sort of in everyone's face as a thing. And the cool thing about NFTs was that they denominated the value of their NFTs in the native currency, the L1 or something like that. So you had SOL price of an NFT or ETH price of an NFT. I don't really think we've seen many of the NFT crowd like denominate things in USD, but that would be a good example of like another use case that could potentially make sense, right? For stability purposes or just tracking purposes or whatever it might be. So yeah, I don't know. We'll see what 2023 holds. I guess from anyone out there that's looking to take a look at Hedge or Nazare or join the community, where should they go? Discord, Telegrams? What do you guys got set up?
We don't have Telegram groups, but we have Discord servers. I think the easiest way to get started is just like check out our website. All the links are there. So for Hedge, that's Hedge.so, and for Nazare, that's Nazare.so. So like, I think .so became very popular with Solana.
I've seen a few people do that. Why was that?
I guess it's just like .so for like Solana,
It's just like .io was a thing, and now like I see a lot of Sol dApps are .so, but because I think Orca's .so as well.
Yeah. I think most Solana dApps are .so just because of .so, like Solana.
Man, we need a .so. Yeah. Where's like step.so or something? Cool. Awesome. Well, definitely go and check out Hedge. I've met Hal many times now at a lot of these different conferences or hacker houses, and they're a great team. So definitely go check them out. Go check out Nazare as well. USH, it's trading everywhere really on Solana. You can see it on Step as well. So yeah, go and check it out. Join the Discord, be part of the community, and yeah, just sort of see how we can help lift up DeFi for 2023. Which I think is going to happen anyway. But so great to have you on board today, Hal. Thanks for coming along, and look forward to seeing you in future.
Yeah, thanks for having me. It was really good chatting, and I'll see you very soon, I'm sure.
Absolutely. It's been a pleasure.
Bye.
Thanks.